For today's three-stock lunch, we're looking at three names that are up double digits in 2024. So is now the time to buy in, or is it too late? Here with our trades is Boris Schlossberg. He's managing director of FX strategy at BK Asset Management and a CNBC contributor. First up, Boris, is Ford. Shares off their highs of the day as the automaker is delaying production of an all-electric SUV and pickup truck in order to focus on offering, what else, hybrid vehicles. Boris, what's your trade here?
I think the trade is still good on Ford. Ford is just generating a tremendous amount of cash flow. I think it's going to have $6 billion of free cash flow going forward. So I don't think the dividend is in any kind of a threat. Stock is still relatively cheap. And even though all the problems on the EV side are definitely there, they're more a function of consumer preference at this point. Consumers are clearly choosing ICE over EV at this point, or a little bit of hybrid. Ford has a lot of know-how in the hybrid space. 10% of their vehicles are hybrid. So I think they're going to be doing really well. The only thing that could really scuttle the stock is a consumer recession, which I don't see happening anytime soon as long as the labor markets hold up.
Let's move on to a company that's about as far from Ford as you can get. That would be Palantir, partnership announcement with Oracle.
Yes.
And so some things happening there. What do you think?
Yeah, I think this is really big. I mean, Palantir obviously is the leader in this deep data analysis space, and the combination of them plus Oracle's infrastructure in the cloud should be a very, very indomitable combination. That means they're going to get more customers from governments, more customers from large corporations. The stock is by no means cheap. It's trading 70 times forward PE, but their growth is 70% year on year. And as long as that growth rate continues, I think it's just in a hyper growth stage at this point. So the stock was good, $3.5 billion of cash on the books, no debt. So, it could be a bumpy ride, but it definitely looks like it's set for the stratosphere at this point.
Last one for you, Boris. Levi Strauss stock is surging higher today after the clothing giant reported solid earnings for the first quarter, also raised annual profit forecasts. What's your trade amid today's rally?
Well, Levi is a very interesting case, I think, because the CEO said they want to now dominate denim from head to toe. And the consumer is clearly coming back to denim. I don't know whether it's Taylor Swift or Beyonce, but the fact that they're sort of acting as cultural ambassadors because of their big country hits, I think denim clearly is coming back into fashion. And if you bet on the fact that denim may be a fashion trend for the next 18 to 24 months, that means very, very positive comps for Levi's going forward. Stock is not expensive, 15 times earnings. Looks very good at this point as long as the fashion trends hold up.
Well, let's talk about the broader market. Interest rates up this week. Big jobs report tomorrow. The Dow down once again today, 300 points or thereabouts. As you see, about 0.8%. 300 points isn't what it used to be, but it still catches your attention.
No. And NASDAQ did a big flip, from 1% up to 1% down. So it was just definitely a very unpleasant afternoon for anybody who's long. It clearly seems to be, I think, the case. The market may be worried about jobs tomorrow, not in the sense that they're going to be bad, but in the fact that they could be really good. In fact, that wages could really be strong. That's going to put a lot more pressure on the Fed to perhaps not cut rates, or in my opinion, what's really going to happen is the Fed is going to do one and done for the rest of the year. And that maybe is what's starting to weigh on the market, is they're starting to realize that rate cuts are just not going to be there given the strength of the economy.
Right, perhaps more hawkish tone. Boris Schlossberg, thank you very much for your insights.